A rating downgrade and macro worries. India has struggled to get a rating upgrade from global rating agencies for a very long time. That is the crux of our problem. But America is suddenly faced with a very different kind of a problem. While it has been near impossible for us to get a rating upgrade, it was equally unthinkable to think America would suddenly get a rating downgrade. But Fitch Ratings has done exactly that and downgraded the US economy from AAA to AA+. It's a significant hit as far as ratings is concerned. What should have happened? What should have happened is that we should see a proportionate adjustment in how people view investing in the American economy, investing in American businesses, holding the American currency, and giving credit to America as a vendor. Is that going to happen? We don't know, but we should look out for that. But what actually happened is that the rupee lost value immediately. It's kind of a knee-jerk reaction which nobody would have anticipated. And we are also seeing nervousness spread in stock markets across the world, and India also reflects the nervousness from the US markets. Interestingly, Morgan Stanley turned the Indian stock market to overweight just around the same time these ratings came out, which is basically a positive indicator that FIIs should come and buy more of Indian equities. But are Indian equities really attractive in a secular sense? The answer is no. We do see some parts of the market extremely overheated, like the small and mid cap space. Investing has to be very selective. If I am an FII coming into India with a lot of money, I need liquidity in the stock to deploy capital with reasonably low impact cost, which means I must be able to build my position comfortably. And I should be buying at a valuation where I have a reasonable upside because I am taking double risk. I am taking a market risk and an exchange rate risk. This is something which will always weigh on the FII's minds, and they want to invest in India. They have been putting money continuously over the last 90 days. But the last 5 days is again a slight twist in the tail. They have been selling continuously. Have they turned sellers? We don't know. We need to keep watch and understand their state of mind. And even if they are buyers, my sense is that they would buy parts of the market which are today ignored. We have been seeing some players like GQG buying out of favor businesses. They bought ITC at one time, they bought Adani at one time. They could be buying some PSUs now. So that contrarian streak is very strong in FIIs. In fact, I perceive that the contrarian streak is stronger in FIIs than in domestic institutions, barring a few. So that's where the markets are, and that's where we are in terms of what we can do and judging what others will do. Going forward, the markets will be volatile. We will react to global flows. Global news flows is another very, very important factor that we need to closely watch. We will have to always factor that into our expectations and into our reactions. So it's going to be a edgy phase for investing in Indian markets. It's going to be also a phase where post the end of the result season on 15th August, people will reset their expectations. Institutional investors, brokerages will once again try to put newer perspectives into the minds of larger investors so that their business sustains, new stories will be sold, there will be some rotation which will be catalyzed because they will tell people that, yeah, maybe this trade has run too far, you can try this one which is under allocated. And FIIs are going to buy into all this because the hunger for returns is high, people are chasing opportunities for returns, and this is not going to go away anytime soon because the inflows into financial markets, into financial instruments remains robust, and the deployment compulsions will continue to remain high. So that's the setting in which investment managers are, that's the setting in which financial institutions are, that's the setting in which DIIs and FIIs are, and that's the setting in which we have to live and work in. So let's learn to live with that. Let's learn to be more responsible, and let's learn to be cautious but pragmatic. Thank you for watching this video.